Hello, everybody. So last panel. Thanks for being there. Very happy to do this panel. And we're pretty lucky because most of the time, the investors panel, you have 4 VCs that tell exactly the same things. So we're pretty lucky here because you do plenty of different things. We have asset managers, liquidity providers, VCs, funds of funds. Some of you market makers. Some of you have several hats at the same time. Can you tell us more about yourself and what you're doing?
Sure. Hello. So my name is Piotrowski. I am the portfolio manager of the Everest fund at CMCC Global. CMCC was the first crypto fund to launch in Hong Kong back in 2016. We've since expanded to North America, and now we have a number of different funds. So we have token funds, we have an equity VC, we have a quant fund of funds. And Everest is our most recent strategy. So we launched it last year. It is a token fund focused on the Avalanche ecosystem. We invest across liquid tokens and early stage venture deals. And before all of this, I spent some years working in TradFi across investment banking and asset management roles.
Cool. Pranav, I run the liquid strategies at VanEck. I've been here for about 3 years. VanEck is a TradFi asset manager, has about 120 billion of assets. About 3 billion or so of that is in crypto and crypto-related strategies. There's ETFs, and then there's the stuff I do, which are more actively managed. So I would say in the main fund that I manage, about 60% of it is tokens, and then 40% or so of the exposure today are in public equities. So we're kind of agnostic to where the best opportunities are. We're just trying to pick the fastest horses in a 2-year time frame.
And I'm Lewis. I lead the liquid fund RE7. I think what's interesting about RE7 is we're very much crypto native from day one. So we have a market neutral fund, liquid directional fund, which I lead. And then we also have Vaults, which I'm sure we'll touch on a little bit, which has just grown phenomenally as well. And then we've just also launched a social FI, so we're heading up the venture side of things as well. So, and before this, I spent 7 years in fund management within crypto.
Yeah, so first, can I just request that if Bitcoin cracks an all-time high while we're up here, can someone just let us know? We can get an applause going. So I'm definitely the odd sheep up here. I work with Cumberland. Cumberland is not a fund. We don't have outside investors. We're part of a company called DRW, which has been a trading business, all proprietary capital for the past 35 years, and Cumberland's been around for about 10 years. We run an OTC desk, which is how I know many of the different funds in the space. We provide liquidity for projects that launch their own tokens. We work directly with ecosystems to help them build depth in their stablecoin ecosystems or their synthetic Bitcoin ecosystems. And we've been really proud to work with the team at Avalanche for a number of years now. So really excited to be here. This is such a cool room. This is a great panel. I'm really excited to be here.
Thank you. If we take a step back, you have investors, LPs that are crucial to our ecosystem because they provide the first fiat money or stablecoins. Or both. Who are these guys without telling any confidential information? What is your relationship with them? What do they expect from you?
Maybe I'll start. I think we probably all talk to the same people. I would say in the last 3 years, the biggest pool of capital that's coming into managers like us, which then ultimately allocate to altcoins, right? That's the pipe in. Our family offices, that's kind of like your number one cohort. Then followed by, let's just say, a handful of fund of funds who are ultimately downstream of family offices and high net worth. The pool of capital we want are ultimately the pension funds, the endowments, the foundations, the sovereigns. That's and RIAs in the US, like the wealth management channels. Those are very, very large pools of capital. Most of them have not allocated to the space. They've started allocating to, let's just say, Bitcoin and Bitcoin ETFs. There are a small subset of them that have kind of dabbled, that have opened up, let's just say, a Coinbase Prime account or something, and have kind of allocated some small tokens. They tend to shut those out when something like FTX happens. They don't want any headline risk. So that's how I would describe sort of who's in the space so far and who's likely to come in the future.
Yeah, I mean, it's pretty similar for us. We launched in 2016. Back then, we were raising from high net worth individuals. We raised $1 million for the first round or for the first fund, sorry, and that was the hardest million we've ever raised. Now, we've really seen the evolution of the industry. So going from high net worth individuals to family offices to larger family offices and increasingly institutions. So, now one of our LPs in Asia employs, over 1 million people. So, you're just dealing with a different level of investor. And, increasingly, Pranav was saying, the pensions, the sovereign wealth funds, these kind of conversations are really picking up now.
Yeah, I think, what's the list? It would be family offices, VCs, fund of funds, pretty much what you said. One thing I'll add is what's interesting on our side as well is, when we created vaults, do we count people depositing in our vaults as investors now? Some would say yes. What's interesting as well is you can have a conversation with, a potential prospective LP in one of our funds, but then says, actually, we've got stables, we'd love to explore the vault side, and actually can work the other way around as well. So you can have this weird relationship that's evolving as your products also evolve, but the sort of more vault on-chain stuff is definitely generating very interesting conversations because it's very much widening the net for us.
I'm actually, I'm personally in your Morpho vault, so. Yeah, so we don't have investors, but we do have our OTC desk. And listening to you guys talk about it, we had a very similar trajectory with the OTC business because back in 2017, our counterparties were not sophisticated. Many of them were like, hey, I put $30,000 into the ETH ICO, and now I have more money than I know what to do with. And these investors they didn't know how to deal with an OTC desk. They didn't know how to do a KYC AML refresh, and we had to really kind of walk them through it. Now the types of counterparties that we have, and I can share some specifics that have been made public. When Goldman did their first Bitcoin trade, they did it with us. When Nomura did their first Bitcoin trade, they did it with us. We're the liquidity provider for 9 out of the 11 ETF issuers. And so these are like a very different grade of OTC counterparty. And frankly, there is a lot of work that goes into these types of relationships. The same way that we have a lot of KYC AML requirements, so do they. There's a lot of due diligence questionnaires. But frankly, it's pretty refreshing that at least there's someone on either end who understands the process and knows what to do. And this stuff just scales a lot better. This is the type of thing where it's like, okay, we're not going to do OTC trades for 50,000 USD. It's going to be for $5 million or $50 million OTC. And so we like businesses that scale well. We want to be pricing things really aggressively, and to price things at single-digit basis points or very tight spreads. You got to do it for size, right? We don't want to be in a business where we're doing small trades for like large markups. That's not fun for us, and it doesn't scale well for us.
I know you didn't ask this question, but I think a lot of people in the audience probably have a bunch of altcoins, and they're like, why are my altcoins not going up? Like, that's the thing that's top of mind for people. The thing we think about is like the pipes into alts. So really all you have so far is retail pipes, and I think retail has not come back to the same extent it has in 2022. So you essentially have an altcoin market, if you take out Bitcoin and Ethereum and stablecoins, it's like a $700 billion market in value, and the number of alts come to market is exponentially growing. So there's more stuff competing for the same amount of capital. So the thing we care about is like, how do you get new capital in the space? What is the compelling argument to, again, get these endowments, pensions, sovereigns, those types of money in the space? So then you think about, what are sort of their end goals? And then most of these organizations have a return hurdle they need to meet some liabilities. So if you're an endowment, you have a university on the other side that has expenses, and you have to hit a certain return hurdle. So all these guys are ultimately trying to do is maybe two things. One is don't get yourself fired. So if something like FTX again happens, it's headline risk. So now with the positive regulatory change in the US, like that headline risk has come down a lot. So now you can have the next conversation, which is why do I need to have exposure to this stuff? And the answer to that is, I think Coinbase in their Coin 50 report put out a great study, which is if you have a 60-40 portfolio, what are your returns in the last 5+ years? And what is your Sharpe ratio? What's your Sortino ratio? If you have 60-40 in some Bitcoin, what does that look like? And then if you have 60-40 in Coin 50, which is essentially market cap weighted top 50 coins, what is that? TLDR is like 60-40 in Coin 50 is very return enhancing and Sharpe enhancing. So you can now start to have those conversations with these end pools of capital, and maybe some of them will find it compelling and want to allocate to stuff around what we all do.
Super clear, thank you. But we'll get deeper to this question. So in TradFi, especially in Europe, market finance and corporate finance are separated. Like if your girlfriend or boyfriend is not doing the same specialty, you can't talk to them anymore. In crypto, everything is linked, and that's amazing. Where do you see, as you don't do exactly the same things, where do you see the meeting points in your day-to-day business life? Yes.
Yeah, I mean, so as early stage investors, we obviously support our portfolio companies post-investment, and that involves working with, liquidity providers, market makers. We're not dedicated LPs ourselves, but we do sometimes provide capital if it's strategic. I mentioned we have a quant fund of funds. That fund is called Crest. They allocate to a number of different managers. Some of them run DeFi and liquidity provisioning strategies. So, indirectly, we do a bit of that. But yeah, I mean, everybody on stage here plays a distinct role. We work with, everyone in some capacity.
Yeah, I mean, what I'd add to that, especially RA7 as a group, you have so many different hats, like to your point earlier. And, with the social fi, we do speak to other ventures, we speak to founders, obviously, but market makers, for me on the liquid side, is just the obvious one. I still talk to liquid fund managers as well. So we're all like one type. There aren't many liquid fund managers in the world, to be honest. So even if you're seemingly doing the same thing and maybe there's some competition there, it's actually you can pick up on these nuances that you think about things and actually operate in a very different way. And that's great because we all learn from one another, which actually in a way is healthy. And you don't tend to see that in TradFi because I think we're all, to be honest, learning together about what's worked, why alts aren't working and things like that. So there are multiple different touch points and that's just going to intensify as we grow and companies grow as well.
A good rule of thumb is that you want to be working with companies that you feel confident will still be here in 5 years. Because if you are speaking with a company that is not going to be here, you're like, these guys are going to be around for a year. They're probably going to screw you, right? Because anytime you enter into any arrangement with someone or you work with someone, you're basically putting up your social capital. And if you are not planning on being around, then your social capital is not worth much. And so that collateral is just valueless. I think one of the reasons that okay. But, we've been in this, Cumberland's been in crypto for 10 years. I've been working with DRW, which is the parent company, for 19 years. I really like working with people that I really like working with, which sounds like a dumb thing to say, but the relationships that I have, the professional relationships that I have that have been the most successful are not ones where I say like, oh, you need a market maker? We'll be your market maker, right? Because frankly, market making has been, for better or worse, and I would say like for a lot worse, it has been commoditized, right? There are probably, a dozen different market makers running around this conference, and there's probably another dozen running around New York right now for Solana, and like there's a lot of them. So what we try to ask ourselves and the standard we try to hold ourselves to is how can we provide value, not just market making. Like we can market make, we can help you build up your stablecoin ecosystem, we can help you connect with the Fireblocks or the Circles of the world and people in our network that we work with a lot and kind of just help build those connections. Because ideally, I can tell you what my boss judges me on, obviously, is the P&L that I bring in because I work at a company. But really, the KPI that he has for me is when you market make for someone, how many of them have their deal expire and they say, hey, do you want to renew? And if that's not happening, we're doing something really, really wrong. And so that's our focus, is just making sure that not just we're signing deals, a lot of partners, making P&L, but also having folks have a good vibe about who we are and saying like, I would do that again. Because if we're not doing that, that's damaging. That goes from like, it's not just, you didn't get another deal. It's, there's someone out there who is unhappy with their experience with you. And that's expensive. That's what we really try to avoid.
Thank you. So trust is the most valuable coin after all. If, as Pranav kind of cheated on the Bitcoin performance question, I'll bring another question. What do you think about consolidation of your industries? Like, you are doing a tremendous job, you have good assets under management, good balance sheet, but at some point, there might be moves. What do you expect it to be and when?
Yeah, so I think if I were to focus on the liquid directional space, about 10 billion of assets in that space, 3 managers have 6 billion of those assets, and then the other 4 is kind of fragmented. You have a lot of players, and then if you expand beyond that, then you have a lot of smaller managers doing, quant strategies, CTA strategies, variety of different things. Ultimately, I think I used to work at Millennium. I was running a long-short credit strategy there. I think ultimately crypto markets will likely evolve towards the same way the TradFi markets evolved into. So you have primarily passive money in TradFi, so through ETFs, and then you have a handful of big multi-strats, Citadel, Point72, Millennium types. I think crypto markets will probably evolve into that. So there is probably a good opportunity for someone to do a really, really good multi-strat at some point and then consolidate the best talent for different sub-strategies.
Yeah, even sort of CoinDesk 50 or BGCI, you sort of reload those pages, and I've been doing it for years. You think actually that could be the S&P of these, altcoin markets, and at least for us, that's what we try and outperform, because in this particular cycle, especially compared to last, active managers, I think this environment favors active managers, especially if you are nimble, manage risk accordingly. But trying to outperform BGCI is a very hard thing to do. But yeah, that is the benchmark that we have, because we just see it as an opportunity that actually as an active manager, this is time to prove yourselves. So even though people would say it's the challenge, actually I see it as the opportunity. But I think to your point, you're absolutely right. Seeing these indices, and there's different flavors of them, and what's included, how they rebalanced. And at some point, these sort of high caps, they will just have fuel added to them, because over time they're just added. Because how many people have had their conversations with people outside of crypto and they said, I've just bought some Link, and you think, do you even know how to spell that? They keep coming back to the same names, and even psychologically, they're thinking about it from like an S&P or an index. These things that have lasted so long. So there's definitely that mechanism at play as well. So we have to think about that on our day-to-day at least. Because sometimes the obvious names are the ones that do, over a period of time, sometimes actually do outperform. So you've got to really factor that into your framework, I think.
I think there's, the challenge, and I'm putting myself in your gentleman's shoes. The challenge is, 5 years ago, if someone wanted exposure to Bitcoin, they were calling you up, and that was kind of the only game in town. And now you're competing with a very low-cost alternative with Bitcoin ETFs. And so then the question becomes, how can the funds that you represent outperform BTC in a bull? And I would say that there's 3 methods to try to outperform BTC. The first is leverage, which is great when it works, and it doesn't always work, and so let's just put that aside. The next is altcoins. In general, and I'm in very general because this hasn't really worked out well for the past few years, but in general, smaller coins tend to have a higher beta. Which means if Bitcoin moves 1%, maybe ETH is going to move 2%, and AVAX is going to move 4%. And that hasn't really been true for the last few years. And in particular, it hasn't been true on the upticks. Bitcoin has really differentiated itself, and it almost isn't a benchmark for the crypto industry because it's really doing its own thing. In 2024, Bitcoin more than doubled. Many alts were down. Not underperformed Bitcoin, but down. And so there are still winners out there. You can still find the winners of the altcoins, and you can outperform Bitcoin that way. But it's very challenging. And then the other strategy that we're seeing a lot of folks turn to, and it's not too dissimilar to the leverage strategy, but it is distinct, is using options, right? Because if you have an opinion that the Genius bill just passing is going to mean that the market structure bill is going to come in the next 6 months, you can target. You can say, like, I'm going to buy 150K calls that are going to expire in September because that's when I think it's going to happen. And that kind of serves as a bit of leverage, but also it lets you express your view, your exact view, much more precisely than just like long Bitcoin. And so we're seeing more and more funds, that traditionally were just trading, BTC, ETH, and alts are now, coming to us and saying, okay, we want to trade on these centralized exchanges options, or maybe we want to set up an ISDA, which allows them to trade not just options on Bitcoin and ETH, but also on AVAX, also on altcoins. And as a treasury management tool for anyone here that works for a foundation, the ISDA option is it's an absolutely valuable tool because you can not just hedge your risk, but you can also generate yield on your treasury, which anyone not doing that, it's almost like financially irresponsible.
Can I counter some of the framing there just to make it spicy for the audience, make it interesting?
Go.
All right, so I started my career as an intern on one of the bigger derivatives desks, and my takeaway there is like, trading derivatives is like being the trader on pump fund. Like the trader loses money, the house makes a lot of money, so it's great for you, but terrible for like the guy buying calls and puts. Over the long run, I don't know if that really makes that much money unless maybe a small subset make a lot of money, like pump fund, like 1% make a ton of money. But so using leverage on a 100 vol asset, that's crazy. Like I don't know why people do that. So that doesn't make any sense. I think what I increasingly tell people is like, if you want exposure to Bitcoin, do it on your own. You know, you can get it very low cost, like you said. There are ETFs out there. We have one. And I think Bitcoin's kind of in a league of its own. It's not a cash producing asset. It's trying to compete with gold and the long tail of fiat currencies. And it seems to be successful. So if you find that interesting, then you got to get your own exposure to that. This everything else world we all live in is sort of extending that idea, which is, can you put apps on blockchains and get a bunch of people to use it because it's enabling something new or saving costs for someone else? If you believe in that thesis, then you should look at this other stuff. And it's not, and you can't expect it to return anywhere near the same. It could return better than Bitcoin if you make the right bet. It could return worse than Bitcoin if you make the wrong bet. It's a venture bet. It's very, very different from this. So I generally tell people stop benchmarking liquid strategies with Bitcoin, because you don't go to like a Tiger Global or Coatue or Altimeter and say, did your directional tech fund outperform gold or did it not? Right? That's just the wrong framing in some ways.
Just on the benchmark point, you know, like we have a view that over the course of a cycle, AVAX will outperform Bitcoin, and our goal with the Everest fund is to outperform AVAX. And we have a fundamental view, obviously, that the setup is very strong right now. There's been a number of upgrades, and developers are now really flocking to the ecosystem, really choosing Avalanche over other solutions, whether it be L2s or app chains. And I think for us having this dedicated focus is attractive actually to investors. Because there actually is that clear benchmark where we come out and say that we are trying to outperform AVAX.
Great. I really read the notes. No, honestly, it's very insightful. On the narrative side, so all these narratives come back, are growing. The sub-network one was a big one, and I was a big believer in this one. I hope it will come back because it has really interesting setups and value creating setups. What are the exciting narratives for the next years on a more personal level for you guys?
Oh, there's so many, and I'm just saying that. I mean, I'd say the go-to answer is stablecoins, but for good reason. So I just think every vertical that at least we look at, stablecoins just has some intrinsic part to it or a core function. Even Avalanche, the vaults we've created, there's been a huge surge of demand, and obviously the institutionalization RWA side of things is just phenomenal. I mean, already looking at 26 billion RWA on chain, setting aside stablecoins. So that's just a chart. If you light up the screen, is a clear direction. I think the more interesting one that's talked about less, but still talked about, is DePIN. I mean, I thought it was a really interesting signal with, say, AT&T and Helium. Not necessarily Helium per se, but it's just the fact that these real-world existing companies in not just DeFi or finance are actually leveraging decentralized networks in order to actually bolster their own company and their own reach. And so it's really path of least resistance, and that's actually why I entered the space, is to be on the train path of least resistance, and whether that's Bitcoin and gold, stablecoins and remittances, or even Wi-Fi and AT&T, I just think it's really interesting to see that move. And I guess I should say agents, but I'm sure people highlight that. I just think from an exponential technology to another exponential technology, the genie's out of the bottle on that one. But again, agents have complete applicability across a number of different verticals. So as a generalized horizontal concept, I think it is probably the most exciting. Just in terms of timing, that's where it gets a little bit tricky for me.
Oh, nice.
Let's go.
Right. Let's go.
But apart from all of that, Bitcoin for me.
agree on stablecoins. I think the thing we ask is what's next after that. And it's also like, how do you make money in stablecoins is the other big question, so we can always debate that. The next thing we think is going to happen is if you get stablecoins to like a couple of trillion, like the Treasury put out in their report last week, I think the same people buying stables all around the world will want exposure to U.S. capital markets. So we're going to tokenize some U.S. funds and equities and all these things and ship it to them. Again, asking who's going to win with those things are going to be the primary questions. Our view is distribution is king. So if you already have all the users, all this stuff does. And by the way, those winners are likely on the equity side, like public equities, not, crypto tokens. But so that's one thing. The other thing I tell my team is generally like, crypto is great at reinventing different casinos constantly. So like NFTs were a casino, ICOs were somewhat of a casino, AI agent stuff were a casino, Pump Fund was a casino before that. So we just reinvent like a new casino game. And so I tell my team, like, spot these things early, like be early, and rather than bet on like the things that are making the casino work, like what usually finding the platform bet is the easier bet, like, bet on the casino in this case. So we're always looking for the casinos.
It takes time to look at a million things that are down the stack, and you think, actually, what are the horizontal plays that captures all of it? And so it's one of those things where you can do away with the sort of pure venture style bets, which is there's one in a million of these things that could do well, and actually where does the value potentially accrue and create, and actually you can model it. So it just helps from that perspective as well.
Yeah. I mean, for us, the way we look at it, like in terms of verticals, is like what is closest to product market fit, whether, and then what that means, it's like either like direct on-chain revenue or like real user adoption stats. And there's kind of three areas that we see it, and especially in the Avalanche ecosystem, but it's on the gaming side, DeFi, and with institutional type products. Gaming, I think everyone saw the big announcement with MapleStory. That's a huge franchise, 20 years of gaming content and IP being released. They chose to build on Avalanche. Huge potential for user onboarding. On the DeFi side, there's a number of protocols that are generating real revenue, and they're flocking to the chain. So, we're seeing a lot of established protocols like Euler went live on Avalanche, got 100 million TVL in 3 days. Vertex went live, has been generating really good perp volumes. Our portfolio project, Pharaoh, has surpassed 10 million in revenue on a 7 million market cap, sub 50 million FTV token. So, and on the institutional side, I mean, the guys here have mentioned it. I know we're running up on time, so there's quite a few things going on in the ecosystem.
I mean, Bitcoin crossed all-time highs 2 minutes ago, so I'll make a point about Bitcoin. I think that Bitcoin as a store of value is probably, besides stablecoins, and I love talking about stablecoins, but besides that, I would say that Bitcoin as a store of value is one of the only product market fits that crypto has really brought to market. And I love DeFi, and I want DeFi to be successful, but most folks who are involved with DeFi consider themselves crypto native. And so one of the opportunities that I see, and that I hope others start to see as well, is if you can bring 1% of Bitcoin, wrap it in synthetic Bitcoin products, 1% of Bitcoin would 10x the TVL of the entire Avalanche ecosystem, right? So you have the main product market fit of crypto is almost completely disconnected from DeFi, which I think is actually the most important potential product market fit of crypto. So that's something that I'm hoping to see more of, is really strong synthetic Bitcoin products. And the foundations working to bring them more on chain and get them more active. I would love to be able to, take my Bitcoin, which I'm not selling, right? I'd love to be able to put it on Benchy, borrow US dollars against it, and use that to buy my house. That's the type of like real world application, real world use case that like I would be very happy with. And I know I can do it right now, but I want to see more of that, and I want to see more products like that.
A huge thank you. Unfortunately, we don't have time enough for the question about regulation, so sorry for that.